Hi everyone and welcome to our market update for June 2016. I'm Aaron Upcroft. I'm here with Rob Gilmour. Rob, tell us a bit about the RBA decision today.
Yeah, thanks Aaron. Well, the Reserve Bank decided to leave rates at 1.75% after their cut last month.
Yeah, okay, so look, we always talk about the background and the drivers behind it, so tell us a bit about the decision today.
Yeah, well look, it's largely inflation driven in terms of the RBA's thinking at the moment. They decided to cut rates because inflation was very low. And this is a bit of a concern globally. So a lot of those low inflationary effects are being imported into Australia. The RBA sees that as a bit of a risk to the economy, so they decided to cut. And they'll be very vigilant in terms of the next inflation number in order to inform the next move on rates. Part of it's also our exchange rate. The cut in rates has certainly resulted in a lower exchange rate since then, so that sort of helps out our exporters and our economy. But on the flip side, some of the other data they've been looking at in terms of employment seems to be holding up quite well.
Okay.
ANZ figures recently were quite good on employment. The growth number, the headline growth number, was excellent in the last quarter, but looking through it, there were some weaknesses given it was largely driven by exports. So look, very data driven. Inflation seems to be the main concern for the RBA, and if you look at what is generally expected by the market, it's not about will the RBA cut again, it's about when. So the next meeting will be probably a live meeting, that's for sure.
Understood. And so look, on the lending side of things, look, there's still a lot of competition between lenders. Rates are obviously dropping, you know, in the past, 6 months or so. Overseas offshore markets with the investors, that's always a tightening area. APRA's been, you know, they've been tightening for some time, like we've discussed a number of times. So,
are you seeing a translation into lower rates? Because I know we certainly discussed last time that most of the rate cuts were passed on.
Yeah, and they were. So there's a lot of rate cuts that have been passed on in full. Some of the lenders are using it to take a bit of market share, but the competition is still high. So it was surprising that last time it did get passed on. Be interesting to see what happens again if there is another rate cut in the foreseeable future. But really, I think there has been a little bit of loosening with the offshore and the investment lending. Not a lot. Mainly the offshore is really tight. Investment lending in general has probably opened up. Owner-occupied lending is definitely very, very competitive still. So,
I mean, it's interesting. The RBA actually made reference to the banks tightening their lending standards, and that continuing. Is that what you're seeing, or seeing it change?
It is, but it's only in very small niches. So there is credit policies tightening. There's a lot more crackdown when it comes to personal expenses. So living expenses is a very big area where all lenders are focusing on. It's good to see. It means that they're trying to manage people's expectations so they don't overdo it. So it's not a bad thing to see. The old days of what some basic information you used to put forward with the loan application, they're gone, and it's now a lot more detailed. So there's a lot there now.
Yeah, and look, I think also the cut in rates is certainly starting to translate into sort of more buoyancy in the property market, and I think that carries some real risks. You know, looking at Sydney and Melbourne specifically, also the large supply of apartments coming onto the market, which was also specifically mentioned by the RBA, that they've noted that that's coming, and it's almost like they're cutting rates to preempt some weakness there. So it's a very fine line that they're walking.
It is going to be a fine line, absolutely. Look, what do you think the overall outlook is then in terms of rates in the next few months? I mean, what do you think?
Yeah, look, I mean, obviously it's widely anticipated another cut to rates. Yep. There's certainly a lot of debate whether it'll be one or two. I find it hard to believe it'll go more than one, but then again, overseas events have sort of forced the RBA's hand to a certain degree. We're coming up to a very interesting period with markets. Certainly overseas, investors will be focused on the UK decision around the European Union. That could have huge ramifications for Europe and potentially markets. But it could also just flow through as a non-event. And of course, at home, it's our own election.
Yeah.
And you know, there's some really live issues. A lot of angst has been caused around the government's proposed changes to superannuation. And you know, the election is really going to decide as to whether those changes are going to come through, and whether there is actually pressure on the government to review that. So yeah, all in all, I think caution warranted. Though lower interest rates will certainly be supportive of our market as people try and hunt for income in a low interest rate environment.
Yeah. It sounds about right to me. I think they'll probably be steady as they go for a little bit just to see the outcome of the election.
Yeah.
But anyway, look, that's our market rate update for June 2016. We'll see you again next month.